While many edtech companies have struggled to stay relevant in the age of artificial intelligence, one green owl seems to be flying higher than the rest. Duolingo has transitioned from a simple language app into a monetization powerhouse, with its stock price reflecting a massive shift in investor sentiment. But as we approach the next earnings report, the stakes have never been higher. Is the valuation justified by real growth, or is the market pricing in a perfection that's hard to maintain? Today, we break down the strategic metrics, the AI integration, and exactly what the smart money is looking for in Duolingo's upcoming results.
On May 4th, this is the date circled in red for every Duolingo investor. After a brutal 2026 that has seen the stock lose over 40% of its value, the market is no longer looking for good results. It is looking for survival of the growth narrative. Before the numbers even hit the tape, we need to look at the fear gauge. Currently, the implied move for Duolingo following this earnings call is hovering between 12% and 15%. To put that in perspective, a $110 stock could theoretically swing to $125 or drop to $95 in a single session. Why such high volatility? Because last February, Duolingo did the unthinkable. They beat revenue estimates, but issued guidance that terrified growth investors. The market is now coiled like a spring. Traders are pricing in a massive move because there is zero consensus on whether CEO Luis von Ahn's user-first pivot is working. If you are holding DUOL through Monday, you are essentially holding a high volatility event where the market is prepared for a double-digit reaction in either direction.
For years, the bear case against Duolingo was simple. Great app, but can they actually make money? That narrative changed significantly over the last 4 quarters. Duolingo has successfully shifted from a growth-at-all-costs model to a profitable enterprise. Investors are no longer just looking for user numbers. They are looking at net income and free cash flow. In the previous fiscal year, we saw Duolingo turn GAAP profitable, a massive milestone. The upcoming earnings will be a test of operating leverage. This means, can Duolingo continue to grow its revenue at a faster rate than its expenses? As an investor, you should be looking at the sales and marketing spend. If they are growing users while keeping marketing costs flat, the business model is working.
In the world of subscription apps, engagement is the leading indicator of future revenue. Duolingo reports daily active users, DAU, and monthly active users, MAU. But the secret sauce is the ratio between them. A rising DAU/MAU ratio suggests that the app is becoming a daily habit for more people. This gamification strategy, streaks, leaderboards, and notifications, is what keeps the churn rate low. If Duolingo reports a slowdown in DAU growth, the stock will likely take a hit, even if revenue is good. Why? Because today's daily users are tomorrow's paid subscribers. We'll be looking for whether they can maintain their record-high engagement levels as they expand into new subjects like music and math.
The biggest catalyst for Duolingo right now is Duolingo Max, their higher-tier subscription powered by OpenAI's GPT-4. This is a crucial part of the pre-earnings checklist. Investors want to see 2 things here. First, the take rate. How many super Duolingo users are upgrading to Max? Second, the gross margin. Normally, AI features increase computing costs. However, Duolingo has been very vocal about how AI actually reduces their content creation costs. Instead of paying thousands of experts to write sentences, AI does it in seconds. We need to verify if the gross margins are expanding. If AI is making the product better and cheaper to produce, Duolingo isn't just a language app. It's one of the most efficient AI implementations in the public markets today.
This is a technical but vital area for retail investors to understand. In a subscription business, bookings represent the total value of subscriptions purchased in the quarter, while revenue is that value recognized over the life of the subscription. If bookings are growing significantly faster than revenue, it's a bullish signal for the next 6 months. It means the cash is coming in now, and it will show up as revenue in future reports. Pay close attention to the deferred revenue on the balance sheet. This is the gasoline in Duolingo's engine. A drop in bookings growth would suggest that the low-hanging fruit of the language market might be thinning out.
Duolingo is no longer just about Spanish or French. Their expansion into music and math is a long-term play to become a multiversal learning platform. While these segments are likely not generating massive revenue yet, the commentary from CEO Louis Von Ahn regarding the cross-selling of these products will be vital. Are language users also using the math app? If Duolingo can prove they can successfully launch new subjects using the same OWL brand, their total addressable market, TAM, effectively triples.
As we head into these results, Duolingo is a company that has moved beyond the speculative phase. It is now a high-growth, profitable tech firm. The key risks are valuation and the potential sell-the-news reaction if growth isn't perfect. Watch the DAU growth, the adoption of Duolingo Max, and the guidance for the rest of the year. Duolingo has a habit of under-promising and over-delivering, but in a high-interest rate environment, the market is less forgiving of any stumble. Stay rational, look at the data, and remember, the owl is watching, but so is Wall Street.